gap up, you just have to buy, right? You open your chart, say gap up, we now, prices moved up. Maybe I don't buy, wait for the next day. You can't be sitting and waiting, hoping to see something in the price action. And now you're there, say, oh my goodness, should I buy? Is this too late or not? If you are trading fundamentals and you haven't bought here because of everything in your stats, right? Or bought, you placed an order here. I don't know if it had been filled, right? Gap up. I don't know how it's too big a gap. Maybe filled pretty late in the day. And if you left an order in, the broker is still going to fill you in. But even if you got filled in late, you're not disappointed because you're anticipating that war will break out. Now war is broken out, price is going to go up. So as a fundamental trader, you just go in and say, okay, like the gap up, we didn't gap down, which should have been. But hang on a second, why are we gapping down? I expected that the war would affect stocks and price would go up. And now it's done what it should have done, it should have bought. As price action traders, trading the daily, I wouldn't do anything because I have my measured move of this range. And I'm saying, well, if I was buying here, that's a profit target, right? And if I bought here and I got to that profit target and the war erupts and I get all of that, now what do I do? Either I can just bank my profits or trail my stop up. Okay, we hit it, gap up, trail my stop up. If the bears are strong, we're going to just reverse. Then all you'll be doing is just trailing your stop up. Okay, so two different mindsets. If you had not already bought, if you bought in here as a price action trader, that's the target. Then when you get there, 100% profits, you decide, do I stay in? Don't I stay in? Whatever. War is erupted. Bulls have gotten there. I wonder if we're going to get more from the bulls. You can trail your stop up and just enjoy and wait. Okay. Now, that is oil. Here is something that I find interesting. I just kind of looked at the charts. Okay, before I move from here, let me have a look and see what this question is. Or is it a question? Bank some profit, let the rest run. I suppose you can do that. You can bank some of your profits. That's an option, right? So when I talk to guys who trade with me, when you get to a measured move, either take full profits, bank your profits done, or what I prefer, and the guys, I keep telling the guys that what I prefer is trail stop because you don't know if there is more. So if I had been trading this chart and this happened, I prefer to trail stop. If it comes back and takes me out, well, fantastic. I'm very happy with that, but I do it consistently. Oh, sorry, guys, this should be off. I do it consistently. Okay, if you are a banker of profits at 1 times risk reward, you do that. So with the guys that I'm trading with, either you bank your full profits or you trail. Yeah, we don't do partials. We can, but All right, let's see before I move on. Oh, okay. All right, Sam, got you. All right, all good, all good. All right, guys, so this is oil. Now, here is what is interesting about the war. I think it's fascinating from a price action perspective. I had a look, I just came in and look. I said, well, let's have a look and see how the financial markets have reacted to the war. Just pick up any chart. Okay, let's start with what is the famous one that everyone's been jumping on and up about? Gold. Let's start with gold. Now look at that. This is gold, guys, on the daily. Okay, gold on the daily. I mean, we've got that January high and you got the February low. So we are in between the range of that high and that low. So, we are in there, but there's enough height, if you like, enough range between the high and the low that you can get a trend and you can buy, etc. But look at the war. Bulls pushing up to get to that high, test that high, break out above it, and just keep going. The war erupts. We have a gap up. I mean, if you look at this candle, we closed here. and we opened here. There's a gap between the close and the open. So market went up, bang, market went up. Okay, I need to mark it. There is a high of that candle. And there is the open. So we went up from here to there, gapped up, bulls pushed up. I mean, bulls that had been buying here or whatever reason, holding on to their trades were saying, oh, this is fantastic. Maybe because there's war, people are going to rush in and buy more gold, and we're just going to keep going up. Kept up, but immediately started selling off. Second day, huge bear candle. Pretty disappointing for all the bulls who have bought here because now they're all losing positions. You know, if you interpret this in terms of fundamentals, I don't know what you make of it, but from a price action perspective, beginning of the month with that gap up, war broke out, big bear candle. Now we are inside the big bear candle. We are in a range. So as far as gold is concerned, you know, there's no like excitement around you. Say, oh my God, let's get out of it because there's war. Let's jump into this war. Absolutely nothing. It's a bit of a flurry day one and day two, and now we're just back within there. So we are stuck in this range, made up of that high and that low, and we're just within here. And then, of course, in the month so far, that big candle, that's the range that we're in. The bears are going to have to break out beneath here and sell to try and test this low. And maybe they'll give, you know, daily traders a setup somewhere within here, depending on what happens in the sell to get to here. If at all I'm going to be buying and thinking about gold, you know, we have to get above here or get above here. So, you know, just park it. I will just park it and do nothing about it. Let's look at currencies. We're still talking about the effect of war. Let's look at yen. I mean, if you just looked at this one and you just came in, and best way to think about it, you got a son, a daughter, a cousin, a niece, someone who really likes you and you spend time together and they know you're trading and you just kind of messing around with them. If you open up this chart and say to them, when do you think something dramatic happens? You know, like a war or a bomb going off or whatever. They're going to look at this chart and say, oh, I think something big happened here way back in January. That's what they're going to look at. I mean, look at that. That was huge. And then, you know, it was something here. What do you call this, auntie, uncle? We call it a gap. And then gap down. That's what they would say, right? And say, oh, well, yeah, I guess that was something else, but that was the most dramatic. They're not going to point to anything in here to say there is drama taking place. The yen is like saying, okay, war is going on, big issue because lives are affected, etc. But as far as that economy is concerned, there's really nothing dramatic here that you're going to do differently because of the war. So you're just trading this based on your strategy, and you got to make decisions. Okay, you know, do you buy here when you've got this big bear candle here that led, you know, to that collapse? Do you buy here? Here, do you have enough profit to make there, or wait for the breakout? But not driven by war, right? Nothing dramatic is happening there. Let's have a look at, or let's look at pound. Again, we went into the weekend leading to the war there. Okay. That was trading range. And the bears were thinking, well, okay, we've been selling off, not dramatic, but if we the bears, are strong enough, we want to break out beneath here. Why? This is the low of January. Okay, if we break out beneath here, we're convincing everyone that this bullish breakout, you know, is just, we've neutralized in any case now. We're going to break out and we're just going to keep decelerating down to zero. Let's make the pound USD worthless. Get out at 1 before it becomes completely worthless. And then the war erupts. I mean, I don't know how, from a fundamental perspective, the war should be affecting the cable. Is one of the strongest, most liquid currencies in the global financial markets against USD. You'd have thought there must be something that kind of shows that war erupted. I mean, this was the last candle. This was the opening candle. I mean, barely even calling that a gap, because of those lows and the highs. And we've just been in a trading range. No one getting excited. I mean, if you listen to the news, the BBC and the news, they're going to be talking about the war, of course, and the impact on individual stock, whatever. But as far as the currency is concerned, hardly or nothing that stands out as far as the price action is concerned to say, hang on, this is because of the war. Had this candle here been the Monday after the war, we would have said, oh my goodness, look at what the war has done. But nothing. Let's look at euro. Again, there was a low of January, and the bulls were really doing their best just to try and get higher in that tight trading range, ascending, but it is a trading range. And the bulls were working the whole week and grinding up and pushing up as we angled up. And they're saying, well, kind of worked hard for a week here, but if we can get a bull candle, test that, and maybe we can start accelerating. Then the war erupted and gapped down, closed here. Just see this bull candle at the top. War erupted, ended up with a bear candle, big bear candle. But as the day opened, I mean, very, very minor gap down from the close, the top of this green bar, and the open, the top of the red bar. We sold off, and the person said, okay, this is fantastic. We're going to sell off. If your signal said sell, you decide where to put your stop because you're saying the bears are strong. You haven't woken up on the Monday after the war erupted. The bears are strong. They are clearly saying, okay, we now have a new law in the month of February, beating the law of February. In January, we've gone beneath the law of February. Let's get beneath the law of January. And if we do that, bears will be saying, well, okay, from a price action perspective, we can get down here, or maybe if we're strong enough, we can just keep dropping this asset value even lower. But this is the first week of the war after this beautiful bear candle. Nothing. Well, bear candle, but there's nothing. They failed to break out beneath the low of January, and then we are in a range again. So what I'm trying to point across, we see when I look at a couple more, is unless something dramatic happened, like with oil, based on your fundamentals, with trading fundamentals, it's just a chart. It's just the market. The market is just doing what it's doing. It's going to keep on doing what it's been doing. The things you've got to watch out for, of course, with specific products in wartime is spreads and volatility and all of those things. But based on what we've seen here on the daily, there's nothing dramatic that is revealing to us. I'm not saying it's not going to happen. Maybe what erupted, things had to consolidate. Maybe this coming week now, things are just going to explode out on the financial markets. All we got to do is continue to look at the chart. So this is where price action comes in. Well, I'm a price action trader, it's continual, but you've got to now look at things purely. You've got to be careful, not purely on a price action, but price action has got to be topmost of your thinking. Okay, you've back in all the fundamentals, you're watching all the news, you're aware of what's happening in the world, but you've got to look at the price action because that's going to show you exactly what's unfolding now in the marketplace. Okay, so don't stay away. One of my friends is a trader who is in Egypt right there. I'm sure he could open his windows and see some of the stuff happening. And I just happened to catch up with him, and he says, I've not been trading this week. I said, why have you not been trading this week? He says, because of war. I mean, now he is right in the Middle East, and you can imagine the news and everything. I mean, that must be, and everyone is scared. Family, it's just so real that he said, I'm not trading because of the war. And I said, okay, let's have a look at the charts. Let's look at what we trade. Okay, whether we have had setups or not, but there is nothing stopping us from trading. Just watch when you go to execute, watch your spread. If your spread is usually $2 or $3, if it's now $7, just stay away. There's just so much that's happening, but you don't want to do that. But if you're telling me I'm not trading because the spreads are wide, fantastic. If you tell me you haven't executed a trade because you haven't seen any of our strategy setups, fantastic. But if you're telling me you're not trading because of war, then that's a problem, because there is nothing that we see in here that is telling us that we should not be trading. Okay, I hope that's kind of making sense, guys. Okay, so that's currencies, right? Let's have a look at US indexes. I mean, let's see. There, the guys that they got all these expensive missiles, they're throwing things at each other. This is US 100 tech stocks. Okay. Now, again, if you were to ask your niece, nephew, cousin, whatever, to say, where do you think war erupted? They would not be able to say, well, right here. You can't see, you can't tell anything. Okay, it's a trading range. You're going sideways. If you traded the way that I traded, you would already said, listen, if you trade on the daily chart, I trade on the 15-minute, there's a lot more opportunities, but the price action is exactly the same. You would have said, oh, look at that. There is no way I'm going to be selling until we get beneath here. Am I going to be buying? No, I'm not going to be buying going into this month until at least we break out above here. Then I can see whether we test, blah, blah, blah. And nothing has taken place that is telling us that your price action review has to shift. What you thought end of January has to shift because look what's happened, the candles at the wall. Nothing. I mean, these candles are beautiful, right? For intraday, inside the day, 15-minute traders. I mean, any candle is beautiful, just depends where the opportunities are. The one thing that I've noticed, actually, which is interesting, for traders, which is most of us here in Asia, Hong Kong, Singapore, Malaysia, Australia, trading daytime in Asia, there have been beautiful moves and beautiful trends. And by the time I come to London Open, I'm like, oh man, it's happened already during Asian session. But that is beautiful. That is fine, because many a time guys are saying, oh man, George, it's happening in London session or US session. So the trends have been there across all markets, which is absolutely beautiful. That's just a little bit of side turn for traders on the 15-minute. But on the daily, nothing in NASDAQ telling us jumping. Let's look at the top US 30 company, Dow Jones 30. I mean, there's got to be some drama there, right? Top 30 companies. Is there drama, guys? The only drama, nothing saying war here, but the only drama is two things. One, here, there was the low of February. That was the candle, the Monday of the war. Look at the Friday we closed here, right? And Monday we opened. I mean, we closed and we opened. I've got to point this. This is fantastic. We closed here and we opened here. And if you look closely, I'm hoping my charts are showing it. Where we opened was just a test of the low of February. Now, what does that suggest? Okay, so we closed there, opened there, went up a bit, bull candle, and then bears came back, tails at the bottom, but the bears have broken beneath the low of February. What does that tell you? That says to me that even though the push of the button was a surprise, the war had already been baked into the US 30, into the top company stocks. The wise guys, the programmers, the computers, the economists, the CEOs, the fund managers, the risk managers, everyone had already factored it in. They had the information. The only thing they didn't know when that button was going to be pushed. They probably knew it was pushed. By Friday, some would have known, hey, it's likely to get pushed. And maybe positions already taken. Okay, so there was no dramatic thing like we saw with oil, which is now a resource directly affected by the war itself. But in terms of company stocks, nothing is suggesting on the Dow Jones 30. There could be individual specific stocks that really either gapped down or gapped up because of direct influence of the market. But in terms of the mix of things, nothing dramatic. So that's the first thing that probably is dramatic breaking. But then if you look at the low of January, we've now broken out beneath the low of January. And I mean, there's nothing dramatic. There's no way, no daily trader would have sold any of that, those funny candles. But as erratic as it is, as indecisive as it is, as no bear trend candles or tails as it is, the morning dramatic thing was broken beneath the low of Feb, low of Jan, and low of December. So if the bears are strong, they're going to give us some decent enough breakout trend candles to jump in. Let's have a look at an industrial economy. Dow Jones 30, not Dow, German 30. Okay. Oh my goodness, German 30. Again, same kind of thinking. That's the low. Let's do this just to, okay, a bit of a upward trading range, compressing triangle, that kind of stuff. On Friday, the bulls would have thought, hang on, we have an opportunity to break out above the high of January. When they're seeing all of this, they just need one more bull breakout trend candle like we had here and then follow through. And then we had that bear candle, and then look at that beautiful breakdown. Gap down, closing here, opening here, selling by the bears. That was the low of February. If you wanted to sell that for a test of that with your stop as tight as that, you could have done that and made money. I would not do that. After the gap down, you need to stop up here, and I don't have enough risk rewards. I would have let it go. But you could have taken that trade, tight stop, made your reward. Then the bears just wanting to sell this asset. Okay, every time they sell, this is good for the bears. I mean, big breakout trend candle, the body is closed beneath the low of February. Tail on top, bulls come back, bulls follow through. Bears try again, dodgy candle. Bears are strong, but they're not giving us a good enough signal to trade. So you're just on the daily chart, you're just going to have to watch it. You are pretty happy. Well, I don't know if you're happy, but you can observe, just like we saw on Dow 30, that, oh my goodness, that the bears are strong enough. Okay, I'm not sure why that's taking place. I'm going to do that. That line there, the bears are strong enough. That led to a big bull breakout. We took that out, and the bears are strong enough, not just to take that out, which is a key level, but also to take out the low of the month. So bulls, beautiful bull run. Bears have taken that out. So the bears are strong, but they need to give us a signal. So if you're thinking from a price action perspective, you can be thinking bearish, but there's been no signal. All right, guys. So what I wanted to show with you, we are right at the 30-minute mark, is the impact of this war has just been in a commodity that is directly linked to that particular region. Now, even though that commodity is factored in to many of the, I'm going to put this, I won't spend time here, is factored in. I mean, if you look at UK 100, there's big oil companies here, BP, Shell, etc., all those oil companies. Why then, if they're such big companies, the UK 100, why are we not just accelerating up? Because oil has gone up. Okay, there's other factors that are taking place. The bottom line is you got to grasp the price action. While there's all this buzz that's taking place in the news, what I'm hoping to have conveyed with you is the price action. What is immediately unfolding in front of you is what trumps the action. Excuse that pun, okay? Price action is the most important thing. Build it into your decision making. All right, guys. Don't see any questions. Let's double check that. All right, don't see any questions, so I am all good. If there's nothing else, I thank you guys, and we will catch up again in whatever forum that we're catching up again. Take care, and we'll see you. Thank you guys for all the posts. KW, thank you. Appreciate it. Gary, take care, guys. Damn, appreciate it. See, I love the feedback. I know you guys were taking in everything. Excellent, guys. Take care. Appreciate it. Thank you guys for all the hands going up. Sam, I don't know if you can hear me, but I am going to close this for you. YKW, Sue, take care, guys. I am shutting. Take care.